To the metals market, you remember just about a week ago, you had that massive surge in nickel prices. It prompted a halt in trading on the LME and basically an invalidation of most of the trades that happened on that day at 8 a.m. Wednesday time on the London Metal Exchange. They will resume trading of nickel futures, but it's going to come with a lot of restrictions, including trading bans, not only for nickel, but for the other metals on the exchange as well. Timma Tanner's Wolfe Research Managing Director of Equity Research. She covers metals and mining, joining us right now to talk a little bit more about some of the that we've been seeing in the metals market. And Timna, I do want to start off here with nickel. The idea here that most people thought nickel should go higher. We know that at least one big trader out there in China thinks nickel should be a lot lower. I guess the big question is who's going to win this tug of war?
Sure, and thanks for having me. I think that the situation on the nickel market is distorted by, like you said, a very large short player. And I think prior to the Russian invasion of Ukraine, it did look like maybe the nickel market was overly inflated, and that quickly changed. And the biggest consumer of nickel is Tsingshan, and that leader was with the short position. I guess it's really hard to say how this plays out, except for that the Chinese government has said that they will perhaps be behind him. They have actual nickel reserves that they're considering putting to support their position. And ultimately, it's a pretty small market. So that's what happens when you get these big bets and big swings in geopolitics.
What do you make, though, about some of the systemic shifts that we've had in the market, the trading bans, the limits being placed on this market when it does resume trading, not to mention the fact that trading was halted for about a week? When you think about this market going forward, what is that signaling to you?
Right. I mean, it's an unprecedented situation to see one of the biggest producers of nickel potentially out of the market, and sanctions and all sorts of uncertainty unraveling every day. And it's certainly, like to your point, is a disruption to those who were invested in the market. If you were right and you were long the commodity, you're pretty frustrated right now that you didn't get to profit as you expected. I don't know if I would take this as a precedent for other markets and expect that this would be continued or repeated. But I think in this situation, it's just a very extenuating circumstance in a pretty narrowly traded market, with the biggest player, of course, the biggest consumer of nickel having such a big bet on it, and then the biggest producer potentially out of the market. It's just a very unusual circumstance.
Timna, when you look across your coverage of companies in the metals and mining space, how are they approaching this environment right now? And who's best positioned to take advantage of these price increases? And on the other end of the spectrum, who might be caught off guard?
Certainly, if you look at the equities, we like the miners here over the consumers of metal, and it's easier to get comfortable, in particular with aluminum. That's the name where we see kind of a trifecta of positives. We see on the one hand, Russia and Ukraine being big suppliers of that metal, and the uncertainty of where it's going to go is certainly supporting the metal. And then you have the commodity itself that goes into making alumina in short supply with a shuttered refinery. And then finally, uncertainty over the power prices in Europe. I think what the market is seeing right now is just a kind of binary effect of, on the one hand, the concern over supply, and on the other hand, Chinese demand, which we can talk about separately. But to answer your question, I think that many of our companies are trying to, as quickly as possible, to pass through the higher prices, and most will succeed. It just could be on a lag of a quarter or two.
Well, let's talk about Chinese demand here. I mean, I don't think anyone thinks that that's going to peel back in any sort of meaningful way. Is that true?
No, actually, the reason you're seeing oil down and other commodities down is there's a big concern over Chinese demand weakness in light of COVID restrictions. And even before that, there was some concern over the property sector clampdown. In my career, I think that people have lost a lot of money betting against Chinese demand. But at that same time, there are a lot of extenuating circumstances with regard to COVID and the property sector in particular that I think could signal a slowdown. The good news for our space, if you will, is that China could be alleviating some of the shortfalls from Russia and Ukraine with some of their extra supplies of steel and aluminum.